Really appreciate, Senator Hagerty, you joining us. I know you have a very busy schedule. There's obviously lots of stuff going on back at your office and on the Hill, so we appreciate your time. And thank you for your service and advocacy for the industry. Caitlyn, likewise, you have been a staunch advocate of Bitcoin and the crypto community and trying to get us banked.
Yes.
And today we are going to talk about Operation Chokepoint 2.0. For those of you who aren't aware of it, it is a name given to a series of activities led by the former administration to effectively incentivize the banks to not provide banking services to Bitcoin miners and other companies in the crypto industry. And it took various shapes and forms, the most prevalent of which was the use of reputational risk as a way to incentivize banks.
Air quotes around that.
Yes.
Reputational risk.
Essentially, we'll be in your office every day if you touch a crypto company, because we view it as risky behavior, as well as a series of other things. Obviously, with the new administration, Congress has been very active in doing hearings. I testified in front of the House subcommittee on the topic, as we as a company were debanked and had to deal with that. But what I'd love to do today is talk to two esteemed experts. And maybe start with you, Senator Hagerty. Obviously, you have a fabulous business background, you have a background in public service, you understand the energy sector, you understand the crypto sector very well, and you're championing the Genius Act today. What are your thoughts on the importance of banking for crypto companies, and what do you see today as still existing of this operation?
Well, if I could just take a step back, you mentioned my background. I started at a place called the Boston Consulting Group many years ago in the financial services practice arena. I actually had the benefit of working with the founder of BCG. And one of the things that he taught me was that if you have a competitive advantage, you should apply that advantage. You should really push it forward. You should push it hard. Well, think about the competitive advantage that our capital markets provide the United States. And it's the fuel for capital investment, which is the fuel for economic growth. And when you have innovation in that arena, you should be supporting that innovation. You should be trying to create an ecosystem that helps it thrive. And the previous administration, with this Operation Chokepoint 2.0 and other activities that they undertook, really did the exact opposite. They tried to kill an industry that was thriving here. And all of the DNA exists here. And it just broke my heart to come into the Senate and hear company after company, yourself included, talk about what's happening, that the developers are moving offshore. Someone would leave the United States and go to Portugal to start a business? You've got to be kidding me. Nothing against the Portuguese, but I'm saying, can you imagine innovative high-tech activity like this moving offshore? It was strictly because of the approach, the regulatory approach that the previous administration took. They waged war. And Operation Chokepoint 2.0 is essentially the weaponization of the supervisory system in the banking arena. Look, the government, regretfully, has been weaponized in a number of arenas, and the American public does not like this. It was weaponized to an extent that people like yourselves were basically blocked from the industry. And as I talked with bankers, supervisors with no direction from Congress, but with a whisper, are told that high-risk businesses should be debanked. You look at what happened to Signature Bank and Signet. You look at what happened to all the banks in the industry that were trying to be in a position to actually support, clear, and facilitate this. They were under attack. So it's a disgrace that it ever happened in the United States. I'm thankful that control in the Senate has changed. Sherrod Brown is no longer the chairman of the Senate Banking Committee. That's how we were able to get the first major piece of legislation through the Senate Banking Committee. And Elizabeth Warren fought me for 3.5 hours on this, by the way. That we moved it out of committee. Elizabeth was only able to hold 5 Democrats with her. I was able to get 5 Democrats to come over with me. And all the Republicans voted to pass this out on a bipartisan basis. This will be the first major piece of legislation that establishes this industry as one that's credible, one that's going to be supported. Again, stablecoin is just the first step, but it helps us start to build momentum that, again, brings credibility to the industry, and I think sends a very strong message to the marketplace that the United States is going to support this.
Absolutely. Thank you for that. Caitlyn, you and Custodia Bank fought and continue to fight valiantly to get a master account at the Fed. And that's an ongoing process. I know there's some things you can't comment on about it, but could you just share with the audience a little bit about the history, the background, and how you think some of Operation Chokepoint 2.0 is still actually happening?
Right. We were hit by Operation Chokepoint 2.0, to your point, in two ways. One, we were denied access to a Fed master account, and then we were debanked 5 times in 18 months. 5 times. The Federal Reserve targeted my company, tried to kill us. And there's a debate whether this was retaliation for us daring to pursue our legal rights in court against the Fed, because almost nobody ever sues the Fed. Because I haven't heard of anybody else who's been debanked 5 times. No, in none of those instances due to anything we did wrong. We have a clean, pristine compliance and operating history. When Jay Powell testified to you that the Fed does not tell banks to close accounts, I know that's not true. And in fact, Aaron Klein from the Brookings Institution spoke up and said, it's prima facie not true because the Fed told banks not to bank the cannabis industry. So Chokepoint obviously is more, we're a unique case, I get it, because we did dare to sue the Fed. But the backstory is, and there's reports about this on Fed master account access as well. Senator Toomey forced the Fed to disclose who owns master accounts. Lo and behold, there are dozens of legally ineligible holders of Fed master accounts. And the Fed is denying legally eligible holders access. That's the lawsuit. The Monetary Control Act of 1980 created a grand bargain between the banking industry and, at the time, the thrift industry, because Volcker could not control the growth of M2, so he wanted the banks to come inside the system. And at the time, the thrifts were outside the system, creating a lot of M2, and inflation was raging in the late 70s, so there was a grand bargain in the Monetary Control Act of 1980 that every legal depository institution got access to a Fed master account, and that's how the Fed controlled inflation. But the Fed it discovered new power. It reinterpreted the Monetary Control Act about 10 years ago. And suddenly there's a lot of litigation about master accounts. That's why. Because for 35 years, the Fed did not leave anybody out, and it started to pick and choose who it wanted to leave out. And now that we have the disclosure of who has Fed master accounts, we now know there are dozens of legally ineligible ones. There's a lot of corruption in Fed master accounts.
So obviously this is still going on today.
Yep.
We've heard stories, I believe somebody posted on Twitter, X, old dog, new tricks, that they were denied banking.
Yes.
We have OCC has clearly stated they have a new set of guidelines. The FDIC has a new set of guidelines, but the Fed has yet to issue any new guidelines. So this seems to be setting up a little bit of a potentially a battle royale, maybe between the White House and the Fed. Senator Hagerty, we all know the Fed is meant to be independent. We also know they have at times done political things. What are your thoughts on this?
Well, President Trump has been clear about the role of the Fed chair and his intention to let Jay Powell serve his term. But if you just look at the level below, Michael Barr, the vice chair, clearly exceeded his authority, his supervisory authority. My argument was he should have been fired immediately. Barr was smart enough to just withdraw from that position because he knew it was coming. I argued to the president, you should fire this guy from this position right away. It's clear that there are situations there that need to be addressed. They need to be addressed in a radical fashion. I just had the candidate for our next OCC chair in my office earlier today. I think the message is going to permeate the system pretty clearly as the president's team comes into office. And there needs to be coordination at a variety of levels. But this is one that doesn't require a lot of coordination. This is one that just simply requires clarity. The market's not accepting this. I'm certainly not accepting it. The White House isn't accepting it. And the regulators, as we put them into office, will not accept it either. So the standards are changing broadly across the industry, and I think the message will be heard.
Yeah. So Another step forward here, we mentioned earlier, stablecoins. Obviously, this is a core part of your work that you're doing. And I know also, Caitlyn, you have recently been very involved in the release or the announcement of Avid. Mm-hmm. Share with us a little bit about Avid and this concept of cash versus non-cash.
Yes. What is a bank? A bank is a special type of corporation that is legally bestowed with the right to issue dollars. And up until recently, every crypto company was a non-bank. The Special Purpose Depository Institution Charter in Wyoming, which is one of the bank charters that crypto companies can get, we are depository institutions. We are legally bestowed with the right to issue dollars. So Governor Waller of the Fed created a dichotomy in his stablecoin speech a couple of weeks ago, which I think is accurate, or it certainly was at the time, that banks issue dollars, non-banks issue synthetic dollars. So if a bank then issues a tokenized bank deposit, that's a dollar. That's different than a non-bank issuing a synthetic dollar.
And to be clear, for example, a synthetic dollar, because it is not cash, you have to essentially look at cap gains and other issues. And granted, a stable coin is always going to be worth $1, but it's more the paperwork exercise around it.
And that's in your bill.
Yeah, the bill that I've got forward, which I'm very optimistic that will get passed very soon, has two different lanes for regulation, depending on whether you're a bank or a non-bank. And if you're a non-bank, you're regulated by the OCC. You can imagine the conversation I was having with the incoming director, both are pegged to the dollar, whether you're OCC-regulated non-bank or whether you're regulated by the Fed. Both of them have to back it up with cash or short-term treasuries. And so these are going to be, very clearly strong, stable currencies, stable coins. And I'm very optimistic that these two paths can coexist side by side, and the industry will flourish as a result.
So as we look forward, obviously, the current administration has already moved very quickly. I mean, they've been in office all of 60 days and done, some people call it kind of Trump time. We're already a year into it. It's like, no, it's only 60 days. But the administration does have a term. And I understand that a lot of what Congress is trying to do, what you're trying to do with your act, is get things into law such that another administration can't just, by executive order, unwind things. What do you think, outside of the Genius Act, are key things that the administration needs to do to protect banking, specifically, seeing as the topic of our panel is banking, regarding services for companies such that they can't be debanked in the future? Because that needs to be legislated.
So I'm going to answer it in two lanes. One is from the legislative standpoint, we need to continue to provide more clarity, to take this judgment factor out. So stablecoin legislation that I'm working on is going to establish momentum. The next piece will be market structure. That's much broader. There are many more components to that. Now, again, I want to see a rapid move to demonstrate certainty and clarity in the market, but that's not the end point. This is the beginning. So we'll continue to move down this lane legislatively. But from an executive branch standpoint, there is a very clear opportunity to change the culture at these supervisory organizations. If I look at the turnover, if I look at the fact that you've got regulators and supervisors that have acted on their own whims, they've decided what particular industries are the ones that they like and which ones they don't. And if you happen to fall into the latter category, well, there's going to be a little bit of supervisory attention paid unless that particular client or that particular industry as a whole finds its way out the door. And it's not just in the digital asset arena. When I was U.S. ambassador to Japan, one of my friends called me. He found himself in a disfavored industry, and his lead bank here in the United States backed out. Capital-intensive industry. It was time for him to roll the next stack. And I said, how fast can you get on a plane to Tokyo? He was out the next Monday. We made the appointments. He got it all banked in Japan. But that is a hell of a bad way to have to deal with malfeasance here in America by supervisors. It's got to come to an end. And it's going to come to an end. I really feel confident about that.
And Caitlyn, what are your thoughts on that?
The concept, so the Firm Act is great. It takes the reputational risk out. The OCC and FDIC have already voluntarily removed reputational risk, and of course the Fed's the outlier. The Fed board is 4-3 Democrats, so it's an interesting question. It does seem like there is a clash coming between the White House and the Fed over whether the White House has authority over supervisory rules and regulations and can force the Fed to follow suit with the other two federal banking agencies. But the other piece is confidential supervisory information. It's a crime for a bank to disclose confidential supervisory information, and what has happened is that that got weaponized to prohibit banks who have been harassed and bullied by the regulators, not all of them have, but many have, from being able to complain to folks like you, because it's legally a crime to disclose that information. And so the regulators were able to flip that as a tool. That the confidential supervisory information was meant to protect the banks from the disclosure of information that could foment a bank run. It was not meant to protect the regulators that were over their skis.
That's a great point, and we've heard this time and time again. Again, it's a component of the weaponization, way beyond the intent of Congress when these, when these entities were established. I think, frankly, beyond the intent of the executive branch when they initially established the guidance to get this underway. But again, the weaponization has happened. It's happened with impunity up until now. Consequences are coming.
Yeah. I think the telling day will be when the industries that have been debanked are able to go to any one of the large banks and open a bank account. I can tell you today, of the top 5 banks, those top 5 banks will still be very reticent to open a bank account for a crypto company. So it's going to take time. Maybe one last question for each of you. If you had a magic wand, what would you wish beyond kind of what's already underway? What's that extra wish you would wish that this administration and Congress over the next 4 years would do? And I'll start with you, Senator Hagerty.
Well, I've had a number of conversations with President Trump about this. It gets into an element of supporting the industry that we're talking about. I feel very confident that we're going to do a good job of getting these regulators back into their lanes, doing what they're supposed to do, and keeping our financial system at the cutting edge of what it can be. There's something else that's missing, though, and that's the energy infrastructure to support where we're going as a nation. And believe it or not, I brought Bitcoin miners, I've been in meetings with Bitcoin miners and President Trump to talk with them about how in Tennessee, for example, we've recruited them, the Bitcoin miners, to come to cost justify the build out of our electric grid. Why? Because their demand profile is perfectly elastic, meaning if there's a storm or there's some big surge, they can shut down. They're a great client because we know that they can help absorb the volume that we want to build long term. They can help us cost justify the system so that we're ready for AI, so that we're ready for quantum computing. I have Oak Ridge National Lab in my state. I want to see this sort of innovation happen over and over and grow and grow. This is a reason that XAI locates in Memphis, Tennessee. We're going to have to build that energy infrastructure, and we need it with all of the above. And if you look at what happened in the last administration, the war that was waged on fossil fuels, the reluctance to do anything in nuclear, I want to see a small modular reactor in Tennessee as quickly as possible. That's where we need to go. If I could wave the wand, that energy infrastructure would be in place already, but we're making it happen.
Amen.
One of our lead developer on Abbott is one of your constituents. He's in Tennessee. I think back on the bank regulation specifically, putting bank regulatory guidance in writing and then have it released in arrears, that's Austin Campbell's idea, is a good idea. It acts, again, as a check and balance against a regulator that happens to be overreaching. Again, not all of them are. It has been politicized senior executives, and a lot of you are stuck in the whole Bank Secrecy Act and customer identification challenge. If financial institutions were able to share information instead of having to re-authenticate every single time and do our own BSA, that would also help a lot. It would cut a lot of cost and enable more credit and services to be put into small banks and community banks if they didn't have such high regulatory cost.
Great use of the blockchain for the banking industry.
Indeed.
Absolutely. With that, I would thank you very much, Senator Hagerty. I understand you have a busy schedule ahead of you today, so thank you for your time again. Caitlyn, thank you for all you do for the industry, both of you. Thank you very much.
Great to be with you.
Thank you.
Thanks, all of you.